Good morning, everybody. Welcome to The Game Plan here. My name is Gareth Soloway with VerifiedInvesting.com. Lots to discuss. We got more economic data today, or at least just about 30 minutes ago at 8:30 a.m. Eastern Time. I'll cover that. What is it telling us? What are the markets doing? What are the big movers in crypto, in stocks, and in commodities? So again, guys, welcome to my neighborhood here. We'll go on the theme of Mr. Rogers. Welcome. Let's go over to the charts. All right, so number one, what are we going to take a look at? So we obviously want to take a look here, folks, and I bring this up because you can see already I have Walmart levels posted up here, over here. If you want to get a jump start on some of the levels for trading, in fact, this level, $64 level, just hit a few minutes ago. I posted this about 30 minutes ago, and it hit. But more importantly, I'm so proud of this, guys. It's the Trader Alpha Action right back here. I basically go over all the economic data, everything going on throughout the day. All of our financial pros are participating and posting. Granted, I do a lot of the posting, but over time, we're bringing in more and more pro traders and advanced traders to help us in here. So again, folks, what I want to do quickly is just go to that Alpha Action. And by the way, like I said yesterday, if you are in play, meaning if you want to sign up for the website, it's free and you can get notified of this. Now, granted, you're not going to have everything to access to everything that's premium, but this is free. We have so much free stuff on here. It is remarkable. Now, I don't know if you guys can see this, but nonetheless, I'm going to go over it real quick. We had Philly Fed Manufacturing Index coming in at 4.5 versus a 7.7 expected number. That was weaker than expected. So Philly Fed Manufacturing, weaker than expected. Last month was 15.5, so very much weaker. Housing starts coming at 1.36 million. That is unbelievably light, folks. The housing market is struggling here, which honestly makes a lot of sense. I mean, how many people can really afford a mortgage when they're already leveraged to the hilt with credit card debt, with auto loans, with all of this other stuff? Incredible stuff there. Jobless claims come in at 222,000. That was a little bit higher than expectations of 219,000, but remember, last week it was revised to 232,000, so it's still down from last week. These are people filing for unemployment. All right, Walmart again reported earnings. We talked about that. I can show you guys the chart levels on that in just 1 minute. But again, some very key things here in the charts. I'm going to flip over to financial news, which is also free. Here's my Walmart post, which I gave you guys the level here. And again, we can even scroll down and actually just click on this and look at the chart level real quick. So Walmart reporting earnings this morning. I've already posted the level here. $63.50 to $64. We just pierced, as I said, $64 just a little while ago. Take a look at the level right here. Incredible, right? Look at these highs, like all of these highs just over and over and over again, all the way up here, here, and here. So what does it tell us? The probabilities are that this should be significant resistance. All right, now could it pierce intraday? Maybe, but ultimately I'd really expect this to be a very firm level of resistance on the chart today. So again, 64-ish, give or take. Maybe it pushes to 64 and a quarter. We'll have to see. Now, the last thing I want to do is just scroll down here, guys. By the way, I talked about silver. There's an article for those of you that love silver and the levels on silver. I'm not going to get into that, but this was one I wanted to touch on. All right. Breaking news. This was something I wrote last night. It's talking about household debt rises in Q1. This is from the Federal Reserve Bank of New York. They post these numbers every quarter. And again, delinquencies continue to increase. So in this article, just to summarize real quick, household debt increased by $184 billion in the first quarter of 2024. In addition, the Federal Reserve of New York said an increasing number of borrowers missed credit card payments, revealing worsening financial distress among some households. Delinquency rates jumped with 3.2% of all debt in some form of delinquency. Annualized, that's 8.9% for credit cards in delinquency and 7.9% of auto loans in delinquency. So the takeaway here, and you can go look and read more in depth if you want more of the numbers, but the idea here is that the consumer, and we've seen this from earnings, Starbucks, Disney, DoorDash, Expedia. I mean, you could go on and on with how many earnings have been reported in the last month or so where they basically revised their numbers down on guidance because the consumer is slowing down, and this just confirms it from the Federal Reserve Bank of New York. All right, so that's just some of the keys there that I wanted to go over, but again, folks, you guys feel free Sign up for a free account. You can go into your notifications. Every time the Traders Action Alpha, the Alpha Action is posted, you'll get notified on your phone or a financial news, and that's all free stuff, guys, and it's like breaking. It's hardcore. And then obviously we offer the services that we do there as well as the educational courses. Okay, so this is the chart of the S&P 500, guys, or the Spiders pre-market. Notice again, this is where we closed yesterday, so let's talk about that. So we closed here, incredible rally, new all-time highs yesterday, and what had happened in the overnight, we floated up, and then what we're seeing now is a little bit of a pullback coming in. What it's looking like to me is this pullback. This was the candle where jobless claims, the housing data was reported, and basically the Philly Fed was reported. And so what we're seeing here is that even though the markets have been rallying up, and this is something I'm watching like a hawk, the weaker data has been a positive for the market. But today we're seeing the weak data actually cause a little sell-off. So I'm not saying that we're at a turning point yet, but as a technical trader, I'm watching so closely to watch where this happens, because it will happen. Eventually, we will see that negative data on the economy is negative for the stock market. And that will happen when the markets believe, or investors believe, that the Fed is behind the curve and can't lower interest rates enough to save the economy. All right, so again, that's going to be something we watch for. But either way, we are seeing a little bit of a pullback here. All right, still in all fairness, where are we in relation, right? I mean, we're basically flat on the day, right? We're here maybe slightly negative, but it's not much, but it is giving up the early gains after such a robust rally. Now, I do want to quickly touch on the daily chart of the S&P. I have a level here that I'm watching. It's around 533 on the SPY. Now, again, you'll say, oh, well, why did he skip? Why is the line up here? And I'm going to show you in just one second. But essentially, this is my next big level now that we are at new highs. And by the way, this is what traders do. Technical traders, if the highs get taken out, we have to go back to the drawing board and we look at the next level. And then we watch that level. Does it get taken out? And if it gets taken out, we look at the next level. And essentially what you're doing is you're just looking for resistance and support levels. So if we start falling, I look at the levels on the downside. Where are we going to get support? Well, down here would be an obvious level of support, right? In any case, let's go to the weekly chart. I think we can see it on the weekly chart. And let's zoom all the way out here. And this level here is a very, very important level, because what it does is it takes into account the all-time high back at this point in 2007 before we had the financial crisis. We take that high, we connect it to the highest point of 2022, and that's where this 533 level comes in. And so for me, that's a level that stands out because the trend line literally is going back, 17 years to 2007 or so. So again, a trend line that goes back that far. The theory is, in technical analysis, that the further back the trend line goes, the more important it is, the more power it has, because more people say, holy cow, that's an incredible move. And in all fairness, look at how long it took for us to even get to the first hit of this line, let alone the second hit. So it is a big level. I will be watching that very, very closely. It's only about, $3 away from yesterday's close or so, so it's not far away at all. All right, Walmart earnings. Here's your Walmart chart. We kind of covered this already. Trading around 63.50. Remember my levels between 63.50 and 64 as of resistance. I showed you guys that on the daily chart already via that post. And again, just to reiterate how I found that level, I basically looked at this chart and I said, okay, well, what's the general trend? Let's look at this. This is how I find my trend lines. I look at this and I just look back and I say, okay, what kind of looks like it's in alignment? And I'm like, oh, well, it kind of looks like all of these levels right through here, they all line up and it kind of goes up in this direction. So what then I do is once I see that, I say, okay, well, let me grab a trend line and let's find out. Let's put a trend line through here and let's draw it all the way up. And what we can see is that you do have a line that's essentially up in that range. I'd actually lower it right in here so it actually touches all of these points and goes through the high. And there you have it. Look at how accurate that trend line is, connecting all of these highs and this high, and that brings us right up to this 63.5 to 64 level. Now again, let's always remind ourselves, and this is something I remind myself on a daily basis, just because that line is there, does it say that, oh, we can't go above it? No, of course it can. It's just about probabilities. I would say you have a good line like that. It tells us there's about a 70% chance that we'll probably end the day below, which leaves 30% chance we could end above that line. So it's all about probabilities. That's what technical analysis is about. It's about putting the odds in your favor. All right, next chart we want to look at here, guys. This is Deere. Deere reporting earnings this morning. Nice dump on Deere. It's only about a 5% move, so honestly, it's not huge in terms of trading. If we flip over to the daily chart and we take a look at some key levels, we can see that just recently, basically in the last 2 weeks, this ripped up from about 182 to this 414 close yesterday, and now we're back to about 392, right? So from 382 to 414, now back to 392. So again, this is right around where we're trading now pre-market. Now, for me, it's just pretty obvious. If we dumped out here, you'd assume there would be some support at that low. And again, that's right around 380, give or take. So it's another $12 down, $10 down. I'll watch that. I don't know if I'll trade it on an intraday basis in the Apex Live day trading room, but I will keep it on my radar. All right, next up, we have another earnings report. This came out yesterday after the close. It is Cisco Systems. This is a tech stock. We can see that initially the stock ripped higher here. Then slowly it's kind of fallen back to earth here. Now again, going to yesterday's close, we basically closed at $49.50 and we're only trading at $50.88. So it's up about $1.20 on the day. That is not a big move. It doesn't really get me excited in terms of trading it unless we see a big move once the market goes open or opens. Now again, just looking at levels, interestingly enough, and I want to show you guys this. So if we look at levels on the chart, what do we see here? So essentially, we had a level around 53.50, which was a gap fill here, and there's a level up here that's a gap fill as well. So we already touched 53.50 during after hours yesterday. So that's off the table for me as a trader. What I would then do is I'd go to the next big gap fill, which is around 55.50, and that would be a level that I'd hone in on today as a potential short. So in case this surges up, and remember, as a trader, you're not looking for levels where it's already been and chopped around because there's too much choppiness there. You'll get chopped to bits and you'll basically lose money. What you look for, at least what I look for as a trader, is the ridiculous moves. The moves that are like, wow, that's way higher than it was trading in the last few days or even after hours. And that gives me a firm level to look for a technical point like a gap fill or a double top up here. All right, same thing on the downside. If this thing dumps out and goes negative today, I would start eyeing this, let's say, around 46 down here at this low here, knowing that it was at 53 up here or so, and that would be a big reversal down. That would be a huge move down. It would give me an opportunity. So remember, a good trader, you don't, if something's going like this, right? If something's like this, like that, that's almost untradeable for me. That tells me algos are trading, bots are trading, computers are trading. And really what this does is it kind of makes the smaller investor who doesn't have the discipline, the newer investor that doesn't have the discipline, they get in on these they're like, oh, it's breaking down, and they go short, right? And then all of a sudden it takes their head off and it goes the other way. And then they're like, oh, look, it just took out this high, and they go long, it's a breakout, and then it goes back down. It's literally price action with computers trading back and forth, doing it on purpose to take your money away from you. You have to look for the ridiculous moves. That's the high percentage, and you want to use technicals to give yourself the probabilities. Okay, quickly looking at Nvidia. Nvidia, last I checked, was up slightly pre-market. Let's see. No, it's come back in. Basically flat now on the morning session. But again here, folks, if we bring up Nvidia, this is a level that I'm watching for on Nvidia. And remember, earnings are next week. So if we take a quick look here, we have this top right here. Oh, let me get my drawing tool up. This top, and then it coexists right here. And we also have this low here, right through here, and then right through here, and it's basically coordinated around 960. So for me, I do think Nvidia could still get a little bit more upside here. Today, maybe touching 960, but 960 should be some resistance, and then the wild card of earnings next week. I will be watching like a hawk here because this honestly is probably now the biggest, most talked about company. It's not as big as Apple. It's not as big as Microsoft, but those are kind of like old school. Their growth is a lot lower. This is the hot one. This is the one everyone's going to be watching, and it's next Wednesday after the market closes. Okay? All right, on that note, let's do that spin of the wheel, folks. As always, I love doing that with you guys and finding out who wins a one-year subscription to NordVPN today. That was the winner on the board, the Wheel of Appreciation. And we're going through everyone. Whoa, lots of people. And here we are. All right, Ikram Hussein -QQ 9 p.m. Congratulations, buddy. Way to go. 1 year of NordVPN free for you. Having said that, let's go right over to the board. Let's go and see what we got here. Let's do a spin, and we can go from there, and we'll see what tomorrow will give us on the Wheel of Appreciation. Oh, another year of NordVPN. All right, that works. We can do that. We'll do that tomorrow, so we'll give away another year of NordVPN free. Thank you, NordVPN, for being a sponsor here. And again, just to mention, TradingView, Token Metrics, and all of our other amazing sponsors on the wheel, as well as LuxAlgo, right? LuxAlgo is a rock star, as well as iTrust Capital. Okay, let's get right into it, guys. We don't even have to worry about a commercial today. We're going right into the charts. Look at this. I have Platinum's chart up. I didn't mean to start on that, but we'll just start right there. The reason why this is impressive, so number one, look at the run this has had, but that to me is again on watch now because that could be a topping tail. Topping tails are reversal signals for you, those of you that are newbies out there that may not know much about technical analysis. Again, topping tails signal, especially when there's volume, and I haven't looked at the volume today here, but if you get a topping tail on volume, it is significant in terms of a potential short-term reversal signal. Now, on any sort of pullback on Platinum, where are you going to go most likely? Your previous high. So you can see you went up, you went down, you went up, and then you broke out. So the idea is you'd look for a retrace, and this now becomes your buying opportunity, or at least my potential buy on a retrace there. Speaking of which, I'm watching like a hawk here the Palladium chart. It's actually one of my favorite commodities right now. And the reason I'm watching this, so number one, it hasn't run yet, right? If we look at this chart, Palladium is still towards the lows. Now, maybe it doesn't run. That's always a possibility. But what I like is finding things that are beaten down that are kind of not seen yet. And if we look at a trend line here, look at this. Look at this. So basically what I'm doing here, and you guys can see it behind me, is I'm putting a trend line in, connecting these recent highs. High to high to high to high and high. And what we see is Palladium is on the borderline of breaking out. Now, it hasn't broken out yet, so it may not. But if we can get above and confirm above this little level here, let's say at 1,010 or so, then this can go off to the races, and it probably would per the breakout. So a good chart there. We'll do the metals first, then we'll end on crypto, folks. So we'll go to gold now real quick. Gold is getting a little bit of a pullback here. I did see the dollar and yields bouncing after that huge down day yesterday, so that's probably why gold's pulling back a little bit. Gold had a big move. One of the things I'm watching on gold in terms of short-term resistance is the level of the wide range red reversal candle. So see this big one right here, this big red? We'll call it big red, right? So if we take that high and we drag it across, that's acting as a little bit of resistance. Yesterday we hit it, overnight we pierced it, and now it's being rejected. So in the short term, that's a little bit of a level of resistance. If we get through that, then you can test the topping tail high. By the way, we just talked about a topping tail on Platinum. Potentially, it's not there yet. It has to close. We have to see where it closes today. But look at what happened here. You had a topping tail, and then gold pulled back, right? So it does tell you at least short-term pullbacks are likely when you get topping tails. Remember that if we break below this line here, right, then all of a sudden it opens the door to maybe 2,200 or so on gold. But as long as it doesn't, basically we're in this consolidation pattern that eventually I think yields a breakout. Silver, impressive move on silver, testing $30 again. This is a big one here, guys. So if we look at silver, it hit once. So let's actually go through this. This is important. 1, 2, 3, and 4. So we've now hit 4 times on silver at the $30 level. Now you might say, well, are we going to break out here? Well, I would say that I follow probabilities, and the probabilities per the methodology, the PPT methodology that I teach here, is that it's usually after 4. It's usually 5 or 6, the 5th or 6th hit of the level. To prove my point on that, let's go back to gold, and let's go back to the previous breakout on gold. All right, let's take a look. I'm going to extend this line all the way out here. Bear with me as I do that. Bear with me here. So we have to just zoom out even further here, and I'll straighten this line out. There we go. All right. So if we look here at the chart of gold, how many times did it hit on this 2080-ish level, 2085, before breaking out? 1, 2, 3, 4, and then 5 was the breakout. And so my point here when we go back to silver is that most likely this is where we are right now on silver. And I think we're going to do this, which is a very shallow pullback, but then I do think silver breaks out like gold. So again, just a heads up, that's just what probabilities tell us. Doesn't mean it's going to happen that way. It's just, again, I always reiterate that because I know people take absolutes sometimes from what I say. But just remember, everything is probability based. Oil is pushing up today, a little bit of a bounce. We're still making a bear flag formations, which is net bearish. But I am still looking. You have the low here. This is the head and shoulders, right? So if we take that low and connect it here, basically at 81 to 82, that's where if we do float up there, I personally will look to short oil for a breakdown off of this bearish consolidation pattern, right? So essentially what I'm looking for is like that, and then a break to the downside. And I think that coexists with a weak economy, U.S. economy, again, as it weakens more and more. I just talked about those debt levels, delinquency levels, all of that stuff. Eventually that comes home to roost where it's going to hurt demand for oil if the U.S. economy continues to slow. Natural gas, I mentioned yesterday that I started a small short position here. It is up a little bit more. That's okay. I don't mind that one bit. Again, that's why I start small so I can dollar cost average. You might say, oh, is this a breakout above this line? So you could make a case for that. But the other thing I would just point out is we can look and see exactly what some fibs are doing. So if we take this, right, we have this level here on the fib, and this is right around a 618 Fibonacci retrace from this high back to here, right? So we're right in the 618 zone right in there. And then lastly, what I also like to do here is also do from the absolute high in recent history all the way down. Bear with me as I do that. And we drag this down and look at what we're approaching. We're approaching the 50%. And this is where I actually think it's going to stall out here, is that here's the 50% retrace, this line right here. From this high to this low, this is the 50%er, and look, we're basically just underneath it right now. So again, the point being is that as a investor or a trader, this is why I slowly inch into positions, is because you can go above this first line, but then you find your secondary lines and you just slowly accumulate, assuming that probabilities, even if, let's say there's a 70% chance that it pulls back off here, but it doesn't do it because there's 30% chance. But if you have 70 again here, at some point the probabilities work themselves out, and that's where you get the pullback. So pretty cool stuff, guys. I have to say, this is why I love trading, is because always you're getting something new. There's something new and exciting. There's a new stock moving. There's a new crypto moving. There's a new commodity making a move. And there's always shorts or longs. I'm unbiased in pretty much everything out there. And that enables me to not care if something goes up or down. All I care is it going into resistance? I look to short. Is it going into support? I look to go long. And by using probabilities via charts, it helps me make money consistently. Not all the time. I have plenty of losers, but more often than not, I have winners. All right, guys, as always, thank you so much for tuning into this game plan this morning. Check out that homepage. Check out what we have, guys. Come to Verified Investing. It's for the people. For you guys, it's all the core data that I wish I had as a newbie, and I hope it helps you guys and gives you guys great insights that are unbiased and data-driven. Have a good one, guys. I'll talk to you later. Take care.